Hello, everybody. Good to be back down on the floor. Can everybody hear and see me okay? Hopefully that is the case. It's a little lively down here today, as you can hear the screaming next to me. And the big trade today, the big trade today is a rollover. So it's a quarterly rollover of S&Ps, and we've got a big quarterly expiration coming up. So, it could have a lot of volume by the end of this week. So that's the noise you hear going on right now. There's a lot of rolling positions, whether it be S&P futures or whether it just be December expiration positions rolling out. That is the bulk of the trade here today. Now, I know in the Russell, which is just to my 11 o'clock or so, is the Russell pit over here. There is a lot of downside put buying today, which would be good for our IWM position that we are actually trying to exit right now that we have. So we'll see what happens. I think there's also just a lot of positioning ahead of tomorrow's Fed announcement. Where are the fries? No fries that I see right now, but I'll let you know if they pop in here. So a lot of positioning ahead of tomorrow's Fed announcement, which we've talked about, ad nauseum. We know they're going to lower rates by a quarter. What is Powell going to say, though? Is he going to, kind of throw away the dovish rhetoric and start getting a little more hawkish? What's going to happen? So that's what the market is really waiting for. So S&P's down 21 right now. We were down as high as 35. The Dow going, I'll post this up here in a moment here. The Dow is going, I think for day 12, this would be in a row if the Dow is down again today, longest streak in a very, very long time. NASDAQ is coming off its lows of the day. It's down about 50 points right now. I'm trying to see what the 10-year is doing. Come on, what is the 10-year doing? I know it was down slightly a little bit here, but you know what we're doing today, guys? We're going back to school. Those of you that are in my class here, I like teaching the old-fashioned way, right? Put pen to paper. That is how you learn. That is how you get to the level that these traders are at. That is how, you learn not to be robotic. So today is all about Rodney Dangerfield and back to school, learning the old school way. Before we go into that, I'm still waiting for the 10-year to come across here. Before we go into that, 20-year bond. Okay. Looks like a decent auction. Before we go into that, okay, this is what I wanted to talk about. There's a lot. If you turn on, watch CNBC, Fox Business, Bloomberg, whatever, or get any emails from a business site to you, that's what everybody is talking about right now. The bad breadth, not bad breath, like where I need a lifesaver, which I might use anyway, but the bad breadth in the market, meaning that right now the Mag 7 are the one carrying the market, and other stocks, especially in the S&P, not holding up their part of the bargain. So right here, if you guys look at this chart right here, and I wanted to pull this again just because this is so front and center in the news right now. So it's 11 days in a row. Today would make 12, 11 days in a row that there have been more declining stocks than advancing stocks in the S&P 500. That is the longest streak since 1990. Okay, so the thought process, the real easy thought process of that is that's bearish, right? Well, you know what? Not really. If you look at this chart here, okay, looking at the longest streaks ever, it's actually a little bit. Hello, man, someone. Big order. I don't know if you guys could hear that or not. Big order. That was a roll of some sort. I'm going to have to look at the tape here. Oh, there we go. There we go. 1 month roll. Okay. So it's actually bullish here, guys. Significant outperformance across the board, except for 1 year. So you can see it right here. Okay. Does everybody see that on the screen here? So there's all this talk about, just a few stocks carrying the market right now and how bad that is for the market. But if you look, with the exception of, what is that, 2001, which, if you look at that time frame, September of 2001, and unfortunately we all know what happened there. This was actually very, very bullish. So just wanted to show that to everyone, because sometimes headlines don't tell the entire story, right? So you got to really take a dive into it. And I'm not saying that, you want to get long on that for any reason just because of that, but certainly it's not necessarily as bad as everybody is talking about. Bozo the Clown. Did you ever go, Bozo the Clown? Did you ever go to a Bozo the Clown show? What's up, Chew? To a Bozo the Clown show, live show here in Chicago at the WGN studios back in the 60s and 70s. Boy, back in the day, that was like, if you were a kid growing up here in Chicago like me, that was like, man, you had to wait years and years and years to get tickets for that. Okay, guys, let's dive into going back to school. Okay, and why it is so important to not be so robotic and just, listening, or not listening, but just looking at your screens, looking at your trading platforms and reading a P&L chart, but not really understanding it. It's easy to identify, oh, wow, I make money here, I make money here. Lots of rolls here. I'm still trying to figure out which roll it is. Okay, so it's real easy to just let technology take over for us. But if you don't truly understand the dynamics of trade, of options, what things mean, I'm not going to say you're wasting your time here, but you absolutely are not going to be the most efficient trader that you could. So why do I do things the old school way still, which is the way that I learned, but why do I still do that? And why do I like to teach that to my students? Well, number one, you get to break down your position, especially if you have a spread on and you don't really know why you have one side or the other. Okay. If you do this the old school way, you break down your position so you can understand each component. Okay. You understand your break-even points rather than just looking at your graph, looking at your P&L graph on your screen and saying, okay, I make money there, I make money there, I lose money there, whatever it is. I want you to understand why. Okay. Now, it also allows you, by understanding your positions, it allows you to be proactive and not reactive. It allows you to anticipate. Maybe you need to exit a position. Maybe you need to roll a position, adjust a position. Okay. And if you understand the dynamic of the position ahead of time, rather than just, oh my God, look at my position, what do I do now? You will be in a lot better shape. It's going to make you a better trader. There's no doubt about it. And I want you to think like, and the reason I have Tom Brady and Steph Curry up here, okay, I want you to think like a quarterback. I want you to think like a point guard, okay, or the general, where you are directing things, okay? You've got to see the entire court. You've got to see the entire field and not just have tunnel vision when you trade. Does that make sense to everybody? It is so important. It is so important. I mean, if you just want to be a casual trader and, do what your screen says, okay, go ahead. But I'm telling you, if you want to take that deeper dive in, you've got to do things, at least get to the point where you understand the breakdown of how your positions work. Okay, so I'm sure that many of you have seen me go through these types of P&L analysis spreadsheets before. Okay. And it's nothing more than just a simple Excel spreadsheet that I've created where you're able to plug and play. Okay. Put in a position, put in a stock price, and you will get the values of your position. And if you do this, okay, if you put pen to paper, okay, or in this case, if you actually input the data on your own, okay, you will really start to grasp and start to learn where your positions do well, where you may have to adjust something. Okay, so we're going to go through some live examples right now. Some live examples right now. So Sandip, okay, and this is not prepared. Sandip, since you're the one that said, yes, it makes sense. Give me any stock you want to look at and then any position in it that you want to look at. Any stock, any position, call spread, put spread, whatever it might be. Okay, you throw it out here. I'm going to put it up on the board. We're going to go through this P&L analysis so we can break things down. Okay, Baidu current position. Let's not do a calendar spread, Sandip, because that throws a wrinkle. Okay, John, we're going to go with a Palantir call spread. You got it. Okay, here's Palantir on the screen. Okay, now this is going to be for example purposes, guys. This is not, I'm not advocating a position here. We can certainly look at it, analyze, identify, but this is not going to be necessarily a position that we're putting out. This is all for our discussion purposes. So first thing that we're going to do here, I've got Palantir on the screen. Okay, we're doing this live. Stock's trading basically 75. So let's blow this up here, maybe make it easier for everybody to see. Okay. 75. I'm just going out next month, January expiration. So if I look at the 75 straddle, the expected move, what's my target? And we're bullish. John says he's bullish, so we're bullish. Okay. So what would be my target here? Okay. Basically, the expected move is, 11, 12 bucks or so. So my target is, well, it's going to be higher than that, ZW. Right. The expected move is adding together the call and the put. So it's right around 11 or 12 bucks here. Okay. And actually, you know what I'm going to do is I am going to go out and we are going to go one further week where we have $1 strikes. So we can even get more into the weeds here. Okay. So 75 expected moves about $14. So we're going to say our target is 90 here. Okay. Let's do a P&L analysis on the, and again, I am just picking this out of the weeds here, guys. 83.90 call spread. Okay. 83.90 call spread. Let's say we can do that for $1.40. Okay. Now let's pull up our P&L analysis. So we're going to do the 83.90 call spread. Hang on with me here, guys. Hang on with me. Where is my spreadsheet? Where is my spreadsheet? That's not what I want. Hang with me here. Sorry, guys. Enable editing. All right, let's see if this is going to work. Just disregard that. Okay, there we go. Okay, does everybody see that on the screen now? Okay, so we're going to make this long January 83 call, short, and is this not enabling me to edit? Okay, that's not good. Oh man, guys, I want to. Come on, I got to get this here. Why can't I do this? This is so embarrassing. Hang on, I got to figure this out. You guys all know I am not so computer literate, but we'll figure it out here. Okay, it says I'm signed in to Microsoft. Okay. It says I'm signed in. Don't show this again. Okay, maybe I've got. Okay. Activate. I'm signed in. Oh, man. All right, guys, you know what? This really stinks. I didn't know the computer I am on the floor here. Hang on, give me one more second, everybody. See how we got to do things on the fly, even when it doesn't go our way. Let's see, maybe now. One. What do you mean this site can't be reached? BS. BS. Still says it can't be reached. Okay, hang on one second. I got another way of being able to do this here, guys. Everybody just hang with me here. Really appreciate you all being here, because this is, I'm a little annoyed with this right now, but we're going to get this going. Hang on. I know how I can get this going. Okay. Let's do. You guys like seeing everything there? Okay. Back to school P&L analysis. Okay, I got it. Phew. Come on, open up, please. Open up there. Oh, I just had it. 7580. There it is. Can everybody see that now? Whew. I had to switch that really quickly. Can everybody see that now, guys? Yeah, you know this is live, right? Stuff happens. Okay. Here we go. So we are long January 83 call and short January 90 call. Okay. And we paid, what do we say, $1.40, right? Okay. So we know at expiration, if the stock is lower than 83, which is the low strike, we know we're not going to make any money. Everything is going to expire worthless, and it's going to be donezo. Okay. We also know by the same token that best place for any stock to go is where? Short strike. Okay. So right here, guys, 83 or lower at expiration. And we are going to have a complete loss. Okay. At anywhere above, we're going to start making some money back. So at 84, it is loud down here. This is worth $1. Okay, so we lose 40 cents. Okay, this is the easy part, guys. Just doing a regular vertical call spread like this, that's the easy part, right? Because we know it's our debit. If it's lower than our debit, with the value of our position, we're going to lose money. If it's higher, we're going to make money. Okay, so we can keep going through here. 500 JP, 500 us. 7, 8, and 1, and 9, and 2, and 10 and 3. Okay, so if you look here, guys, again, on a vertical spread, it's kind of easy. It's kind of easy, but I want you to do this because I want you to visualize where positions start making money, where break evens are, where you get into trouble, so on and so forth. Now you start making money here. And once you get to 90, that is going to max out because that is the short strike. Okay. So visualize that. Okay. I know for me, seeing things visually, seeing like color coordinated, okay, really helps a lot. Okay, Derek, you can't do the P&L like this for calendars, diagonals, any position where you have two different expirations because we don't know what would happen after that first expiration. Let's say that first option expires worthless. We don't know what's going to happen to the next one.
75.80.
Okay. Yes, Mark, I will absolutely send you this spreadsheet. Okay. Now, real quickly here, guys. This is for Rodney Dangerfield real quickly because I know I had to stall some time there and I apologize. We'll run a little bit later. Here's our word of the day here, guys. Here is our word of the day. Wheel, respect. Okay, thanks for hanging with me, everybody, by the way. Thank you for hanging with me. Okay, now, on this second scenario, and we're going to stay with Palantir. Okay, we're going to stay with Palantir. Let's say and we can still have a bullish position, but rather than buying a call spread, let's say we sell a put spread. Okay, let's say we sell the 75.68 put spread. Okay, and we do that for a credit of $3.25. Okay, $3.25. So now the second one will be short the Jan 75 put and then long the Jan 68 put for a credit of $3.25. Okay. Let's go through here and put these values in here. And again, I'm doing this so you can all visualize where things are at. So this is going to be value of the 75 put, value of the 68 put, and we did this for a credit of 325. Okay. Now, if we are below all the strikes, if we sell a put spread and we're below all the strikes, okay, then we should know that that put spread has maxed out and we're going to have our max loss. But let's see it. Let's see what it looks like visually here. Okay. Value of the spread is 7. We collected 325. That is right. So 375 is our loss there. And it is going to be the same as long as we are below all of the strikes. Just like on the call side, when we were above all the strikes, it was all the same. This is going to be all the same on the bottom. Okay, so this is going to be 9 and 2. This is going to be 8 and 1. And then at 68 or lower, we're going to have, boy, it just got so quiet here. Holy cow. Holy cow. So if you sell a put spread and at expiration, if the stock is below all your strikes, okay, boom, max loss. If we get above that bottom strike now, okay, we're still going to have a loss, but we're going to start making some money back. Okay, so here is 70, 71, 72, 73, 74. Okay, so here you can see what happens is the loss starts getting less and less. Still a loss up to what point?
What?
Still a loss up to what point? And I've got to hang on. Hang on. There we go. Now we've got the right. Now we've got the right values in there. Okay. So right at 72, or actually, it's just a little bit below 72 here, we actually start to make money. So that's where you can visualize where the tide starts to go your way. And then at 75 or higher, when all of the options are worthless, and let me just get that in there. There we go. What do? We have our max gain, which is the amount of the credit. Okay. Now, I know we're running out of some time here. I also have I was going to do a broken wing fly. I'll continue that one tomorrow because today was such a dud because I kept you guys hanging and waiting because my computer down here couldn't get Excel working. Okay. But again, guys, I want you to do things the old school way. This is your money. This is your account. This is your livelihood, or maybe it's a hobby, but you're still in it to make money, right? Take the time necessary to learn this stuff. Take the time to learn this stuff. It won't take you very long, guys. I guarantee you, you do 2 or 3 of these, or maybe 4 or 5 of them, you are going to start innately picking up and being able to visualize where you need a stock to be to make money, to break even, what you need to do to potentially adjust your position. And again, this is all about being proactive and not reactive. Okay. When I was trading on the floor, and we could ask any one of these traders down there, they're all going to tell you they are ready to go. They are not being reactive. They're being proactive. If they are a good trader, and some of them, maybe aren't so much. I don't want them to hear me that, but honestly, they're not. But if you're a good trader, you're already thinking 2 steps ahead. You're already thinking, okay, this broker has this order out here. If I make that trade, then I'm going to do those next 2 trades to shore up my position or hedge my position. Okay. And that's why I had the reference to being like Tom Brady or Steph Curry, where you're trying to see the entire picture, trying to see the entire court. Okay. All right, everybody. Again, I apologize for bothers the heck out of me when it doesn't work out like I want it to. So I apologize very, very much. Okay, let me get the wheel here, guys. And because of that, we're going to go with 2 winners today. Bozo, there is. This is where I used to trade. Live trade, man. Anytime you want to come here, and not just for you, I say this often and I mean it. Anybody that ever wants to drop in and come down here and visit the trading floor and see what actually happens down here, I'm more than happy to bring you down here. This is capitalism at its finest. This is live, open outcry trading.
One bite, half strike, 90 bid.
No, next time you're out this way. Next time you're out this way. But at least I'm glad I could give you this view so you can actually see what happens here. Because most people never ever, not only have never seen this, they think that it doesn't exist. Maybe you've seen it in a movie like Wall Street or Trading Places, whatever, but most people don't think that this exists. And it does. All right, guys, we are going to the wheel here, and we are going to have multiple winners today since I was, not happy with myself. Okay, here we go. Winner number one. And remember, new rules started as of yesterday. If you've already won this week, you can't win a second time. This is a new winner. Andre, are you in the house? Andre, are you here? You gotta be here to win it. You gotta be here to win it. Andre, are you here? Number one, if Andre is here. Otherwise, we're going back to the wheel for 2 spins. Come on, Andre. You got about 5 seconds to let us know that you're still here. Andre. All right, I'm counting down. 10, 9, 8, 7, 6, 5, 4, 3, 2, 1. Andre, you are out, unfortunately, which means everybody else gets 2 cracks at the wheel. So here we go. Wheel spin number 2, guys. Who do we have here? Who do we have? No way is this going to be Derek. Derek, you won yesterday. That's unbelievable. That is unbelievable. So, Derek, you cannot win today. I am so sorry. Unbelievable. Unbelievable. So we still have 2 spins. Here we go on the next one. Good try, though, Derek. That's unbelievable, man. Go buy some lottery tickets. Oh, is it really, Robert? It really is. Okay, Robert, you're here. Are you here, Robert? Not sure what I'm going to send you. I think you have cleaned our closets out. Bear, I think that's true. Derek and Robert are one and the same. Totally, they're one and the same. They're each other's alter ego. Okay. One more, guys. One more. Here we go. AZ Bob or Steve Heck? Steve Heck, are you in the house? New winner here. New winner. Steve Heck, are you in the house? Don't be like Andre was. Are you here, Steve? Come on. Oh, Steve, come on. Don't be an Andre today, Steve. Don't be an Andre. I'll give you 10 seconds. Oh, there we go. He is here. Nicely done, Steve. Nicely done. Okay. What you got to do, guys. Robert, you know the drill. Send me an email right there, prosperswag@prospertrading.com. Send me an email with your size, where we can ship out some swag to. And again, everybody, I really apologize for the hiccup earlier today. What I'm going to do is get a link. Okay, I will get a link to that spreadsheet. And it's just a simple Excel spreadsheet, everybody. So you can take it, use it, manipulate it any way you want to use it. Okay. Bozo, happy birthday to you this Saturday. Nicely done. Okay, we will get that posted up on tomorrow's Market Minds, the link to that spreadsheet. All right, everybody. Again, apologize, but appreciate you hanging with me. Glad you could see some action down here. It's really, really loud down here today, which is a good thing. We'll see you all tomorrow. Thanks, everybody.